Welcome, everybody. Glad that you're all here. My name is Frederik Zuiderveen Borgesius. I'm the chair of this panel, which gives me a rather limited role, namely introducing everybody and then giving the mic and the floor to my colleague, no, not colleague, to my friend Christian de Koene of the European Data Protection Supervisor, who will be moderating the panel. I'll go from here to that direction. Next to Christian, we have Augustin Reyna, the digital team leader at the European Consumer Organization. Next to that, Bjørn Erik Thon of the Datatilsynet, the Norwegian DPA. And he has a much experience with protecting individual rights. For instance, also 10 years as the Norwegian consumer ombudsman. Next to that, we have Javier Pimentel Calderon of Kreditech, a large online lending company. And he does legal and compliance there, and of course is specialized in data protection in the context of financial technology, Fintech. And then all the way to the right for you, we have Miss Cecile Wendling of the AXA insurance company, huge worldwide insurance company. And she is a head of foresight there and is secretary to an independent panel of experts on data privacy organized by AXA. And with that, I'll give the mic to Christian de Koene here.
Thank you very much, Frederik. I just wanted to open with a scene setter, a quote from that radical privacy journal called The Economist in a recent edition. Gary Steingart's novel of 2010, Super Sad True Love Story, is set in the near future when the Chinese yuan is the global currency and people all wear an apparat around their neck with Rate Me Plus technology. Personal details are displayed on ubiquitous credit poles, which are posts on street corners with little LED counters at eye level that registered your credit rating as you walked by. The protagonists are summed up thus. For example, Lenny Abramov, income averaged over a 5-year span, $289,000 yuan pegged, current blood pressure 120/70, O-type blood, 39 years of age, lifespan estimated at 83, ailments, high cholesterol, depression, consumer profile, heterosexual, non-athletic, non-automotive, non-religious, sexual preferences, low-functioning Asian Korean, child abuse indicator on, last purchases bound, printed, non-streaming media artifact, i.e. a book. This is taken from an article about about China's social credit system, and it's something which is premised on the notion of financial trustworthiness and ability to access credit. So this panel is addressing a very, very important issue, which is not just within the data protection privacy community, but it's out there in public policy debates. And two F's spring to mind: fairness and freedom, as two principles which I think we'll be exploring in this panel. Fairness is a notion which goes across data protection and consumer law, the notion of fair processing of data, fair terms and conditions, and then also freedom to operate in the world, operate in society, and obviously access to finance and insurance is part of that, as well as the employment that depends on it. So with that introduction, I'd like to hand over to Bjørn from the Norwegian DPA.
Wow, technology. Okay, thank you all for coming. There's a tough competition among the panels here. So we are really very happy to see so many of you coming to listen to a discussion about fintech, and it's getting personal. Last year we organized the panel here at the same conference called the Big Data Race. And that was about how personal data is used for commercial purposes. This year we decided that we wanted to focus on a specific sector, and we picked, of course, the financial sector, because it is so important to consumers. And I will try to explain first why this is so important. I will make some observations about the market as it is today, and then briefly walk you through some challenges in the insurance, credit profiling, and banking sector. And of course, I will, yeah. So let's just briefly talk about why do we do this? Why is this topic so important? Well, first of all, and I think it goes without saying, that financial services are essential for consumers. It's actually hard to live what we can call a normal life now without access to financial services. And there are new regulations on the way. First of all, the GDPR, of course, but there's also a new PDS, Payment Service Directive 2, that we will talk about a bit later, which will also have a lot of impact on this market, maybe even more than the General Data Protection Directive. And important decisions are and will be based on algorithms, which of course raises concerns for consumers. And the changes that we will see over the next couple of years in the financial sector will probably be the biggest changes that we have seen in this sector so far, I guess. And we are living now in a real, I think I would say, a real odd world, We look at the most successful taxi company in the world owns no cars. And the biggest publisher, Facebook, owns no newspapers. And the biggest marketplace for holiday properties, Airbnb, owns no properties. And probably the next successful big bank that will disrupt this market will have no money. So there's a lot of changes going on. And when Uber was introduced in Norway only 1.5, 2 years ago or something, they hardly had any drivers. It was not really a market, but it started a big debate about taxation, about data protection, about consumer protection. So we have some interesting debates in the time to come also when it comes to financial services, I believe. So let's start to have a look at the insurance sector and what we can describe as the pay-as-you-live system. Because we are facing today new payment models and also new business corporations in the insurance sector. And just recently, and that's the ad that you can see on the screen here, a new cooperation was introduced in Norway between one of the real big supermarket chains, which is called Rema, and one of the biggest insurance companies. So they joined forces. And you can't read this because it's in Norwegian, but to say that good drivers deserves even lower prices. And you got a 15% discount on your premium if you installed a black box in your car with monitoring your driving behavior. And this indicates that insurance premium is, and will in the future, to a much larger extent be calculated on the basis of the pattern of your behavior, on the food you eat, of the friends you have, on your digital profile, than, as it is today at least, not on the statistical knowledge and the collective risk, which is one of the bases in insurance. And we see also that what we can call the usual suspects, Facebook, Google, and the other big tech companies, they are ready to take their share of this market. And Google has signed off 6 separate partnership and investments in insurance texts only for the last months or years. And insurance companies will also influence on our life. This is an advertisement for General Group, which is one of the largest insurance companies, and they have something called the Vitality Program in some countries. And under the motto, a little healthier every day, customers and consumers can achieve a discount on their health insurance and also on health-related products in exchange for sharing data about the level of activity, their eating habits, etc. And this is done by sensors on vehicles, homes, and in our bodies. But we wanted to know, and that's why we carried out this survey, which I actually have a few copies of that I brought with me that we will hand out later. We don't have it for anyone. But we wanted to know to what extent are consumers willing to let insurance companies scrutinize their lives or trade their personal data with lower prices. And the first question we asked was, I welcome a development where my insurance premium is calculated on the basis of sensor-generated information about my day-to-day life and behavior, which is actually some of the text in one of the products that I just showed you. Sensor-generated information about my day-to-day life. Well, in this case, it was my driving behavior, but still. And we see that there's a lot of disagreement with this statement. So there's not very much interest in the population so the big majority say no to this, 69%, whilst only 13 agree. And we also wanted, and this is a very interesting question, I believe, are you willing to trade data for lower prices? Giving a significantly lower premium, I would have no problems giving the insurance company access to detailed sensor-generated data about my day-to-day life and behavior. And again, 63% disagree in this statement, while almost the same numbers, a little higher, say yes. It's worth noticing that there is a difference in age here. The younger generations are more positive to trade their data in exchange for lower prices. And the third question, and this is quite interesting, I believe, because a lot of companies are now launching and testing out products where the insurance companies or the financial sector can be your advisor. So based on your behavior and your surf history or whatever, they can give you advices about whether you exercise too much, how you should invest your money, and so on and so forth. So we asked, I want my insurance company to take an active role with regard to my health, for example, by sending me text messages when I do a little exercise or offering personalized tips of healthy living. And 72% disagree in this statement. Moving to credit ratings. And Javier will talk a lot more about this later. And so well, looking forward to hear that. But today, at least in Norway, the credit rating is regulated in a license from the DPA. And there's quite a limited number and pieces of information that you can actually use in order to carry out a credit rating or a credit profiling. Debt, income, some risk points, stuff like that, and also limited resources. A lot of them are governmental or other public registers. But in the future, of course, behavioral data, tens of thousands of data points, as you can read in our report, will be used in order to check whether you are worthy or whether you can have a credit or not. And we also wanted to know whether this is embraced by the population. But again, the numbers are quite similar here. What would you think if credit rating companies gave you a bad or good credit rating depending on their online activity, for example, which website you visited, what you have posted on social media, and what you have bought online? And again, we see that 75%, 3/4 of the questions people asked, say that they were negative to a development in this direction. Which again sends quite a clear signal that we really don't like this to happen. And finally, I will say just a few words about banking. And the question is, of course, whether Facebook will be our next bank. And again, a bank with no money. When the PDS2, the Payment Service Directive 2, will be introduced in 2018, players like Facebook or Google or Amazon will be able to provide banking services based on the consent from the consumer. And Facebook, they recently unveiled their newly acquired license for e-money and payment services out of Ireland. And the banks are positioning themselves now in order to meet the competition for these big companies. Because if there is one thing that is really sure, is that the big tech companies, the usual suspects, they are really good in developing services. There is a reason why we are using them. They are really good in developing services. And for instance, in Norway, the biggest bank, called the Norwegian bank, surprise, has had a considerable success with an app called EDPS, which is actually a mobile payment application designed for smartphones. We are a population of 5 million people, and over 2 million Norwegians has downloaded this payment app. And the real value in this is not, that they get a sort of transactional revenue when you are using the app. I mean, they get that as well. But they get more insight in the consumer's behavior. So this is a sort of a social network payment system that provides the Norwegian bank with valuable data about the user, about their social circles, they pay movement, they pattern, where they shop, which they can use for other purposes in the next round. And I'm sorry to say, at least to Google and Facebook, that there is not that much interest to use these sort of services, because we wanted to know, would you be interested in using a helpful banking service from Facebook and Google? And a lot of people say no. We want good services and access to financial information, there's no doubt about it. And there's a lot of good things that can come out of this development. So we are looking forward also to the future, of course, and we are optimistic on behalf of the technology. But it's quite clear, at least from our survey, that we don't want to trade our personal data for lower prices. And we don't want fintech companies to know too much about us. And we don't want these companies to make decisions made on our behavior. But when these ideals meet reality, what do we actually choose? Will we still choose privacy instead of lower prices? That's remains to be seen. And how can we as consumers actually control our data when there are so much data? And how transparent can an algorithmic decision actually be? And finally, do we find a solution in the GDPR? These are some of the questions that we will come back to, and I thank you for your attention so far.
Thank you very much, Bjørn Erik. I'm now going to hand you over to Cecile, and just to say that the panelists have very generously agreed to try to restrict their opening presentations to 5 minutes each. This is so that we can make sure we have time for discussion and questions, plenty of time for questions afterwards. Cecile.
Yeah. Hello, everyone. I would like to say that we can hear today, but also more generally reading articles in the press, 3 types of discussion about big data in the insurance sector. The first one, which is very important, is a technical discussion, because we have moved from a statistical approach to a big data approach in insurance, and it raises the question of robustness of our algorithm. So most of the algorithms are trained on a particular data set. How do we make sure that the data set remains accurate, or do we have to retrain them? It's a question of limit of the model that we are using. If we do gradient boosting or if we do other types of techniques, we used to know quite well the bias of a statistical approach. How can we develop that knowledge of unintentional aspect and bias of those techniques? And also a problem that is the risk of companies buying on-the-shelf machine learning that are not really known in their assumptions and the way they deal with the data. So a solution that you read in the press, and if you read also in those kind of conferences of you here, is a testing of algorithm. So post testing of algorithm on a very regular basis. Then there is a second debate that you hear, which is a debate on regulation. And what can regulatory people do on big data and insurance? And what you hear is that they have to solve a puzzle, the puzzle of protecting the customer, ensuring financial stability, but also helping innovation. Because if we do not innovate, then innovation will be elsewhere, maybe in China or somewhere else. And then this innovation might not reflect the value of European citizens when they come to buying a financial service. And here, the solution you hear is for those regulatory bodies to recruit new type of people. So they recruit blockchain experts, they recruit those type of data scientists. They try to have like third parties, maybe going towards labels and certifications and that those third parties could really do external audit and check that people do what they say and say what they do. And the third thing that you see is really the use of regulatory sandbox to say we cannot ex ante, only on principle, decide how we regulate big data and insurance. We must really try and see, but this trial, this experiment, will be made in a regulatory sandbox where the regulators can really spot what is happening and what is the impact on the customer, on the financial stability, what is the value added of the innovation. And third, there is a debate on ethics. And here I would say that there are, first of all, the question of can we limit efficiency of algorithm to make sure they are of high interpretability? So this is a question of the limiting of the power of the algorithm to make sure that a human brain can understand them. There is a question of data-driven innovation versus human-centric innovation, and do we need a human check after all automated decision? There is a question of empowering the customer but not going in a big data society, so with a big brother watching you and so on, all the examples we heard. And here there are lots of debate on open data, open code, open science, open source. And finally, there is a question of segmentation versus discrimination. And here is really the democratic debate on what is our social contract, what means solidarity, and how do we organize properly this solidarity. Having noticed those three debates, the technical, the regulatory, the ethical, we thought at AXA, what can we do? And the decision was taken 2 years ago to create a data privacy advisory panel. This panel consists of 10 external independent experts, so Daniel Lemétayer from INRIA, who is in the room, Peter Stinks, a former European Data Protection Supervisor, Jan Padova, former Secretary of CNIL, and they sit with us and we talk about concrete cases. So we presented, for instance, how we do the telematics of AXA Drive, and we discussed with them how can we make sure that we are protecting the privacy of our customer. And I will finish with this example where we do not monitor the actual speed of each people on this street, but we access an average speed of the people using this street. So this is a way we can still use the question of the speed of driving without being intrusive to who is driving at which speed limit. So I will stop here, and I'm welcoming any questions.
Thank you, Cecile. Javier.
So thank you very much to the Norwegian Data Protection Authority, Bjørn and Katarina, for having me here. I want to start by saying and maybe highlighting and emphasizing on the title of the background paper. It is getting very personal indeed, and I think we have all. This is at least one of the first agreements that we can all have in the panel. And this is the case because companies in all industries are actively looking into the possibility of harnessing personal data for making better decisions. And these better decisions can be in many realms. So it could be to try to solve questions on how to better invest their capital, how to customize certain products to meet customer expectations or needs. It could be questions about whether a given individual is eligible for a given credit, for a given insurance policy, and at what price. And closer to Kreditech, whether a given individual is also eligible for consumer credit. Whether a certain individual is creditworthy with respect to a given loan proposition or credit proposition. So this interest that companies have coincides with the fact that we are in a time where technology allows for tremendous amounts of personal data to be generated, collected and processed, literally at mind-numbing scale and speed. And then I think the first message that I want to send is, and for all of you who read the background paper, there is a problematic and we have to recognize it. If we take the future that we live in, there's no escape to the realization that all of this can go really bad. if we want to put it in other terms, there seems to be this latent yet very possible dystopia waiting to occur. And this dystopia is very nicely portrayed in some of the posters for this conference. So it's basically well portrayed. It doesn't require really lots of imagination, but it's basically a world where machines sitting at undisclosed places get to make very obscure yet critical decisions that affect our lives as human beings in all kinds of ways. So a machine that decides that someone will never, or potentially not in the near future, be covered by insurance. A machine that decides that someone is inapt for a given job. Very, very scary stuff. And the worst of it is that there's the possibility that all of this is done with a clear explanation, with a sense of, this is how we did the decision. Is it fair? Is it adequate? Is it not negatively discriminatory? So, again, the message is we agree, this kind of dystopian future is very possible. And this is because the title of the panel also says, what are the challenges? I want to say that this is definitely one of the challenges that we all, as citizens, legal practitioners, regulators, entrepreneurs, have to address. Obviously, data protection law and what we make of it has a very important role to apply to play on this. How the Bjørns of this world will assert enforcement action, how we in-house make sure that we have the right privacy programs and compliance programs to deal with these challenges. But I want to, given that, and I want to make it I know that we don't have lots of time, I want to also introduce a second challenge, which I think is a challenge that we should not at all leave aside. That is also a challenge that we also should keep in mind when we go about giving meaning to data protection law and when we go about creating some kind of corpus of regulation for algorithmic decision making, for artificial intelligence, and so on. At Kreditech, I have seen, and we have seen in many occasions, we have the good fortune of having people from you could call it the consumer credit 1.0 world, so you're all bankers, you're all consumer credit providers, but we are a technology company at heart, so we also have a very solid team of data scientists, pretty smart people. And what we have seen in many cases is that whenever the 1.0 people go and check the decisions that the algorithms have made, they actually very rapidly concede that lots of the people that we are actually giving loans to would be people that, let me put it bluntly, that would not even be, that they would be considered by your typical, credit officer, that basically credit policies in the 1.0 world are designed to sort of keep these people away. And yet you talk to the data scientists and they tell you, well, this is really interesting because we have lots of, a big chunk of these people whom you seem to somehow have a bias against. They actually come and repay their dues in time, and they end up being great customers for Kreditech. So I think that we should not forget that the technology poses serious potential for dystopia, but that it also poses opportunities. It brings opportunities. We should not forget that whenever we are engaged in the laborious task of construing and giving meaning to data protection law, we need to make sure that we strike the right balance between two values. The value of privacy, the value, and in general, the impending need to prevent these dystopias from happening, but also the need to make sure that we foster innovation, that we don't stifle it, that we don't regulate it away. So I'm just going to finish by saying this. I think that when we, and this is sort of like the discussion that I want to propose, it's more a message about the tone of the discussion than anything else. Let's have this discussion with open hearts and open minds. When we are out hunting for these latent dystopias, let's make sure that we don't end up shooting at other initiatives, ideas, practices, and technologies that could bring us closer to certain outcomes that, analyzed very carefully, look much more like the stuff of utopias. So this is, I'll leave it at that. Thank you.
Thank you very much. Augustin.
Yes. Thank you very much. Thank you also, Bjørn, for the kind invitation. So I'm speaking on behalf of BEUC, the European Consumer Organization. We have a membership of 43 national independent consumer associations, and definitely the area of big data in financial services is a growing priority for our members. Of course, as it was said before, the use of consumer data by financial entities is not new. Lenders need sufficient information to conduct an accurate creditworthiness assessment, and this information is provided by the consumer or when applying to a loan, for a loan, or even public credit registers. However, and this is where it gets interesting, these consumers also generate other data when interacting with technologies and devices, and this is extremely useful data and information for both financials and non-financial entities. The tracking of consumers is becoming easier for banks because people use their mobile apps to check the balances and make payments, or banks are also collecting this huge amount of data. The question is then how this data is being used. I often hear that big data has also the potential to help consumers to make better choices. Of course, there is no doubt about that, but we have to put things into context. Big data also help companies to maximize the profits. You can make consumers pay the maximum amount they're willing to pay for a certain product by applying these data technologies. I'm a consumer lawyer, so I have a love-hate relationship with terms and conditions. But something that our members have already been looking at is how financial institutions are preparing the ground for the use of big data. And we have seen several cases of big banks like ING or BNP Paribas in Belgium that they have started changing the terms and conditions for their own services. But even making clauses so open about the use of the data that is generated by consumers while using even the apps, not necessarily linked to the specific financial service, but really about the consumption data. The problem is that, of course, consumers are just simply asked to agree on this without understanding or even worrying about reading the very lengthy terms and conditions. And they have triggered certain complaints at national level, at least here in Belgium, by our member Testachat. But the question is, what is, of course, the consumer detriment around or the potential consumer detriment around the use of big data by financial institutions? So let's imagine that you log in on your online banking via your phone, and you get then a banner offering you a discount in shoe shops that you visited yesterday. How will you feel about that? So perhaps many consumers, they might like it. They say, oh, I got an offer based on a visit that I did. But what will happen is that offer then will be calculated on the basis of your expenditures on shoe shops during the last year. Necessarily, you wouldn't like that. But this is a situation that is not far from what is happening. If you look at big banks, especially in the UK, or credit card providers, they already monitor which shops consumers use and then offers discounts tailored according to that specific behavior. I think that this runs against consumer expectations toward financial services. Consumers want simple, secure, and transparent financial products. They don't expect to be spammed by advertising. A bank is not your shopping mate, it's a bank. Then we start seeing also the use of big data in personalized pricing of financial products. And it was mentioned in the insurance sector in this panel and in the previous panel as well. And just to give you a clear example, our Dutch member Consumentenbond, they did a study about insurance models based on driving patterns. In a nutshell, your policy will be set up relatively high, and then depending on how you drive, you can earn on rebates up to 35% of the original policy. Now, this could be seen either as a societally useful use of data because it will help to reduce accidents, or also as a potential discriminatory practice. For example, a consumer that do not drive so often is likely to be penalized more than the consumer that drives every day. Additionally, other factors are considered, for example, whether you drive in an urban zone or in the countryside or overnight. And this is just the beginning, because in addition to that, then there is a part of the rebate that it will depend on how other drivers drive on the same policy. And so, for example, 75% of the best drivers, they will get the extra rebate. So at the end, it's not so much about how you drive, but, for example, whether you have accidents in the past, but how the system has been set up. So what are the policy implications of this? I have 4 points. First is consent. So consumers clearly, they need to know what are the purposes for which the data is being collected. But we go beyond that, and this is about take or leave it deals. And this should not be an option for financial services. If I don't want my data to be used in a certain way or to be associated with other services, I should be able to say so and be able, nevertheless, to subscribe to the main financial service. Then, the non-discrimination. Of course, the more data is collected, higher are the risks of incorrect interpretation by the algorithm or adverse effects. And we cannot depend on the algorithm to do the job for us. This is also relevant for financial exclusion. What will happen with those those offline consumers? Will they have to pay more for not kind of joining this online or using enough these online services? Then, of course, we have the GDPR. And here is the basis for this discussion. And then we have the principle that there have to be the guidance for the development of these services. But financial services is a special sector. So as I said before, I deal mainly with consumer law. Big part of consumer law does not apply to financial services because of this sector-specific approach. The question is, do we need a sector-specific approach for financial services in the use and collection and processing of data? And finally, it was a question that was raised several times, is there regulatory oversight? Financial supervisors need to work closer with the DPAs. Now, services become more complex, and especially for consumers. If you face a certain problem with an IoT device, for example, or with a specific app, you don't know where to go, basically. The same happened with financial services. Maybe we'll think that a consumer that faces a problem in relation to discriminatory practices might think, I have to go and knock the door to my financial ombudsman, for example. But perhaps the relevant authority which is competent for that is the DPA. So again, we need to break down the silos between also the regulatory and supervisory agencies. Thank you very much.
Thanks very much, Augustin. Those are the opening presentations. I wanted to move to a discussion now. I thought I'd maybe start with you, Javier, a specific question in relation to something you said. You talked about personalization. Generally, people consider something that's personal to be a good thing. And thinking about this, it seemed to me that there are, within the EU, we have the Charter of Fundamental Rights, and for a lawyer, or a human rights lawyer, you've got Article 7 on the right to privacy, Article 8 on the right to data protection, and Article 21 on non-discrimination, and there's a list, a very exhaustive list of the categories such as gender, race, political views, etc., on which it's illegal, it's prohibited to discriminate against an individual. And in sort of ordinary mortal language, this might be understood as being something, when your rights are infringed, it feels creepy, or you feel shut out from society or the economy, you can't participate. So, simple question, what for you would be, how important is personalization in your business, in your line of business, and how personal can you get with a service before you start to breach the law and ethics?
Thanks for that. So I think I should say that personalization. I mean, in my opening remarks, I mentioned it not precisely in the realm of Kreditech's scope of work. I don't think that is very much the problem that our data scientists are trying to solve. Obviously, you would like to be able to present the product that you have some indications that the consumers will more likely want to buy. But I don't think that's necessarily the main focus. I think the focus is basically the traditional question that the consumer credit industry has asked itself, which is what data can I use about someone that could predict whether this person will repay credit or not. So I should say probably the issue of personalization is not one of the most pressing issues for us. With regards to where to draw the line, well, I think that you mentioned it very eloquently. I think that whenever you have these suspicious criteria, I think that's definitely one of the things that we can agree about. Let me put it bluntly. I don't think, and we should all agree, and I think this is something that, a message that we should hammer very clearly, none of these algorithms that make such important decisions should be in contact with any of these data that could put them in a position to be discriminating against people by all of these so-called suspicious criteria, gender, affiliation to unions, and so on and so forth. So yesterday, I came across a very interesting paper by, let me have it here, by Pasquale and Diakopoulos, and they basically propose some general rules on how to first approach this. And one of the first things that they say is audit input data, and I think this is critical. And by the way, I think this is something that the GDPR already addresses, in a sense, when it sets higher bars for this sensitive data. So I would say that's something that we should all be very concerned about auditing what goes in the algorithms to make sure that it's not problematic. And then obviously, and I think this is also in the GDPR, it's not just about what goes in, but also what goes out in terms of outcomes. So even if we have clean algorithms in terms of the input, let's put it that way, let's see if they are actually good, if they're actually making decisions that somehow don't create negative discrimination, or could it be that they are targeting a special ethnic group and, for example, our algorithms just simply decide not to issue loans to these people. Critical there as well. Maybe he proposes some other criteria, but also something that I think is very important, in my view, is the issue of regulating censoring very, very well. I mean, I think that we should really avoid a world where we have pervasive censoring that we don't know about. So and I say this as a citizen more than as a, if you want to call me a spokesman of Kreditech. I would really hate a world where I'm somehow being monitored without me knowing about it. Yeah. So I would propose those three just to start.
Thank you, Javier. Cecile, may I come to you? I was interested in what you said about innovation, and you've obviously done a lot of thinking in the company about about ethics and about inherent bias in algorithms. But I wanted to ask you a slightly provocative question, also because you mentioned China, for example, as a country which doesn't have, for example, data protection laws or sort of obvious privacy laws that we would, similar to what we would have in the EU. What would you do in terms of innovation if there weren't any data protection or privacy laws in the EU?
Well, that's funny. It's, we don't even ask ourselves the questions. we are pretty much focused in, making sure that we will do everything we can to meet this. But regarding the question on innovation and how do we innovate and be responsible, we believe at AXA that we need sustainable innovation. That if we innovate in a way which is not responsible, that will not work anyway. So we don't think we have all the answers to all the questions I raised before. So we have decided to finance research on responsible AI. So we have something called AXA Research Funds, which finance research on risk since a long time ago. And it's really, we just finance research and then researchers do whatever with the money. So it's very clearly separated. And so we have created a scientific advisory panel on the topic of ethics of algorithm, responsible AI. And those researchers will decide who could be financed so that the research on those topics move ahead for everyone. So for us, but for every sector, even beyond the insurance, because we believe that those questions will be everywhere. It's also for us a question because we will be in a position maybe to insure AI. And so we will have to decide how do we insure boats. And so again, the question is in all the minds, about a driverless car. How do you insure driverless car? How do you insure artificial mistakes? Because we know a lot about human mistakes, and this is how we have developed the way we can price driving and understand how to have a car insurance. So this is something for us which is, we are so much focused on how to innovate in the framework that we have that I couldn't imagine what it would be to be an insurance without those regulations. And I would like to say that for us, we are very careful about data regulation, but we also have the financial regulation, the customer protection regulation, the cybersecurity regulation. So it's not only about one type of regulation. And I would like to say a word also on the questions about how do you make all those regulators speak to one another. So in the forum Fintech, which exists in France, it's a forum which gathers all regulators with the Fintech and with us. So around the table you have financial regulators, data regulators, cybersecurity regulators, they're all in the same room with startups and with large companies. And we're all sitting here to talk about exactly what we're talking about today. So it's happening. It's just not like a fiction, it is happening.
Thank you. Moving back to Augustin, Cecile mentioned cars, and I think you mentioned cars as well in your presentation. Everybody needs insurance to an extent, and it's clearly being in the insurance industry is not a hobby. These are companies, they have shareholders and employees. Also, there's a social aspect. I was just looking up the causes of death on an annual basis. And in the world, there are 55,000, in 2014, 55,000 people died through war. 437,000 were murdered. 1,240,000 died in traffic accidents. I think this is an interesting area of balances of rights and social social priorities. So, as a consumer organisation, what would be the expectations of a consumer, of a citizen? How would you advise them to balance the the likelihood of a price premium if you're considered to be a risky potential client versus the probability that you will be subjected to surveillance of a different nature, that you'll be monitored, that there'll be a black box, etc. You might want to specifically think about the automobile scenario.
So the question is basically, what is the role that insurance institutions can play to make people more conscious about driving habits? Yeah. But we don't have to forget that it's not the responsibility of financial institutions, of insurance to do that. There are systems in place in member states. You have to get your license. If you are a risky driver, you will lose points in your license, and you might be even banned to license or suspended. So are we shifting the responsibility for the sake of defending or promoting this business model to insurance companies? And I don't think that that's the right approach. It doesn't mean that we have to exclude completely the use of data, for example, for the estimation of premium policies. But this cannot be the criteria to establish how much you pay, according to your certain driving habits that are not necessarily related to how you actually drive. Because then, when you subscribe to a policy, then you will have to prove how many accidents you have had in the past. So I don't think that is the right approach to say that insurance policies can actually help to reduce car accidents.
Thanks. Now, Bjørn, Erik, regulators and the response to all of this. We have the General Data Protection Regulation now, and there are a number of what we might call big data rights which are established there, such as on profiling, access to data, access to the logic of the processing taking place, which I think would include things like hidden biases in algorithms, and accountability, of course, which underpins all of it. So how given all the work you've been doing in your presentation and report, as a DPA, how can you enforce these new rights and rules?
Well, it will be very interesting as a start. First, I would like just to pick up the idea from Cecile about what you call the Fintech Forum, which I really think is an excellent idea. Because we still see at the national level, we are a small nation and a quite transparent country, but still we have problems working together with other institutions doing monitoring, for instance, the financial sector. So I will bring that idea back to Norway and definitely, if not start, to at least start talking to the guys in the other inspectorates. And I think also that the consumer, the competition side should be as part of such a dialogue. But moving to how, we should respond to the development that we have discussed today and that we have tried to describe. I think it's very important for us to find a method of auditing algorithms, a little bit as you said. Because a lot of decisions will be made by algorithms, and we have to find a way to audit them. And honestly speaking, I don't know how we are going to do that, but it's one of the top priorities in our work plan this year to try to do that, to find a way to do that. And looking at some of the tools in the GDPR, I would like to highlight just a few of them that I think will be especially important as regards the fintech sector. You mentioned profiling, which is of course very important because what we are talking about today is profiling in a way, so that you can object to profiling, and that also some pieces of information could not be in, cannot be in a profile. You have the question of data portability, which is very important because suddenly my data will have a value. And I think it will be very good, actually, if a consumer who entered into an agreement, insurance agreement with the supermarket chain that I showed you, if that data might have a value, and I can take it to another company and say, I'm a careful driver, but I want 20% discount on my data, which is it's very important. But I would like to highlight a bit the right to an explanation, because that is something that, I mean, the financial sector have to find a way to do that. I mean, they have to inform us about how the decisions are made. And looking at car insurance today, or a couple of years ago, for instance, and I've been working with the insurance business for many years, and even to try to explain how an insurance premium is calculated today is very difficult. You know, it's where you live, my age, whether I have a garage or not, whether I have a street parking, the size of the engine, whether I smoke or not. There's a lot of different elements that it's used to calculate the price. And now with the next step, the black box, it's still probably doable to explain it in a way. But I mean, how do I drive? How fast? Do I use a turn signal? Do I make quick or fast turns? Do I take a fast brake or a soft brake before I stop on a red light? It's quite, in a way, predictable and probably possible to understand. But what is, it's an algorithm in artificial intelligence that are actually making these calculations. And then a lot of other aspects are brought in. My Facebook accounts, my likes, my search history, whether I charge my phone during the night, whether it runs out of battery all the time. So there's a lot of, and how should business manage to describe that to a consumer in a way that makes it possible to understand? I'm really looking forward to see that. And I'm also looking forward to enforce that.
Cecile, just very briefly back to you, but I wanted to open the...
I just wanted to say that there are consultations going on at 3 levels. So, for instance, at international level, the IEEE has opened a consultation on ethical AI, and you could all contribute in the room. At European Union level, there is a joint committee consultation on big data in the financial sectors. It's an open consultation for everyone. And there is, in France, this new consultation launched on really ethics of algorithm, under Axel Lemaire, with CNIL participating, INRIA having a platforms and so on. Many things are happening where you can have this democratic debate, and I think it's important to stress that this is going on right now.
Thank you. Now, who would like to ask a question? Gentleman in the front row here. Is there a microphone?
Great, thanks very much. Fantastic panel. My question relates to, I guess, a little elephant in the room, which has been sort of walked around and approached to some extent, but borrowing down a little bit more into Article 22 of the regulation. I mean, I would have thought this is going to be fairly central. As most of you know, Article 22 builds on Article 15 of the current directive, and Article 15 has been, it's quite a visionary sort of right ahead of its time, but it's also been in practice very much a second-class right. It's hardly ever been used or referred to. You know, there's no litigation about Article 15 and very little scholarly work on it, and I believe too data protection authorities really haven't had a chance to look into the dynamics and mechanics of Article 15. And my question will be, is Article 22 of the upcoming regulation, is it also going to be a second-class right in practice? One reason that it might be is that it says it only kicks in when you've got fully automated decision making, and if you get a human being in that has a somewhat nominal role only, is it going to just sideline then the operation of Article 22 completely? And then the other question would be whether Article 22 ever gets actually instigated by data subjects. You know, if they can't understand the algorithms and they're somewhat sidelined and become somewhat disinterested in these processes because they're sort of overwhelmed by them, then maybe again Article 22 will end up being a dozing provision, unfortunately. So my question is direct to all of you, and I think Frederik could probably have quite a bit to say here that's useful, given his previous work. Thanks.
Don't encourage him. Thanks very much. So Article 22 is the profiling article for those who weren't in the General Data Protection Regulation. Are there any other questions? Because I might take them as a three. Yes, towards the back, and Edward.
Andrew Adams, Major University. There seems to be an assumption in a lot of these presentations and a lot of others I've seen about these sorts of work that when you use evaluations to decide about people's trustworthiness, creditworthiness or related questions, that you always must use not just these to make decisions about whether you offer somebody insurance or a loan, but also to decide what they're going to pay for that. Now, there's some interesting evidence from South Africa that you can split out these two questions, and what they've been looking at in South Africa is it's perfectly reasonable to say you should only lend to people who can pay you back, and you must have some way of doing that, because it's not good for the lender or the lendee to be lent stuff that they can't pay back. But what they've then said is, but you may not disadvantage people by then charging them higher rates of interest. So what you've got to do is you've got to spread the burden of the non-payers, because that's only a small proportion anyway, but you can use these things to discriminate against people to decide whether or not to offer them things. And so I'd like to ask people to consider separating these two questions out, and whether there are arguments, not necessarily for all types of product, but certainly for some types of product, that we should spread the burden of the risk, but in certain cases allow whether or not to take the risk to be used by these evaluations.
Thank you. Yeah, Edward.
You've been talking about profiling for pricing of financial products, but there's also profiling for transaction approval. I want to throw out two examples from my own experience in the US, and I'd be interested in your observations as to whether those would be legal and what my recourses would be had I been a European here and had this experience. Example number one, a few years ago I was traveling in Syria, and my bank saw that I'd withdrawn some money in Syria and thought, you're in Syria, based on profiling, of course, of the transaction, maybe you might have violated the Syria sanctions, which I hadn't, I wasn't dealing with the government, but maybe you might have violated the Syria sanctions. We're going to freeze your entire bank account and approve no transactions until you have left Syria and contacted us and sorted this out. So eventually they admitted I hadn't violated the sanctions, but I'm there in a foreign country, can't get any money. Example number two, on my way here, I purchased a ticket from an airline to travel to Brussels. Now they have transaction processing for fraud, where they will look at the geographic location and say, oh, you're in the United States and there's a transaction in another country, so maybe that's fraudulent, you're not traveling to Nigeria. But in this case, on this trip, I got a proactive, unexpected email notice from my credit card issuing bank saying, we have noticed one transaction for an airline purchase, and we've parsed that to see that you're going to Brussels, so you don't need to bother to tell us that you're going to Brussels. We already know that, and we'll take that into account in deciding whether or not to approve transactions as legitimate that you might make while you're in Brussels. And I found that rather creepy. Anyway, would that be legal here? And particularly in the case of a transaction that's denied, what recourse would I have about that outcome, if any?
Great, thank you. Right, we've got three questions there. There's one on profiling and whether it's just going to be a paper tiger. One on the approach that they seem to be taking in South Africa on ensuring non-discrimination, but spreading the burden of non-payment. And then finally, Edward's point about it's basically. I find it so distressing when that happens. Where was I? Edward's point about basically computer says no. Who wants to take those?
I can say something about the right to automated decision making, because you have to check the Article 22 and Article 15, and we don't have these articles in our head. But at least if you're looking at the right to object to automatic decision making, as you said, Lee, we have that regulation today as well, and we also have a lot of automated decision that is made every day. For instance, if you apply for a student loan, don't think there is a single person who actually have a look at that application. It's automatic, you know. The same when it comes to some in the social welfare system. Also, there's a lot of automatic decisions. But we at the DPA, during the last 6.5 years, when I've been commissioner, have not received one single complaint. We have not heard a single time that anyone has asked for, for a man in the loop to have a look at the papers. So this is a right that consumers have that they don't use. And I'm afraid that it will be the same under the regulation. Because there are a lot of exemptions. So how much, if you look at the expansion, how much is actually left of that right to have a man in the loop to look at papers? I'm not sure of, really. So I don't think that we will see many of these cases in the future either.
Yeah, I fully agree. If I can add something which I refer to in the open statement, which is take it or leave it situations. So what happened when the whole product is based on the profiling? So there you don't have basically a choice, or you get the service and accept the profiling, so you don't. And this is the high risk of financial exclusion as well. Because if I don't want to be profiled, but at the end of the day, all the services that will be available in the market will be based on profiling, this right is meaningless at the end of the day. So I think this is an important element to take into account in the take it or leave it deals. Thank you.
Maybe very quick final comments from Javier and Cecile.
I would just like maybe to make a comment that is probably a bit controversial, but in the right direction, which is we should not be naive. I mean, banks have been looking at our data, and I don't know if you could call it an exercise of profiling, but they have been looking at our data in vast amounts for centuries, figuring out whether they can grant us a loan or not. So I think that we should always, look at this from the sort of like the, functional equivalent type of thing. It is true that given we would be able to get much more data at this point, but it's not a new problem. You know what I mean?
Yeah, but if I very quickly, the thing is, of course, banks have been looking at our data to see if I can get a loan, how much I can get. But the question is whether banks should be able to see that I have a Mac and not an HP, and based on that, fix my interest rate.
Yeah.
So I think it's going even beyond of the normal use.
And what weight will that information have, whether you have a Mac or a laptop?
And this links very well with the question about South Africa. I've been running compliance in Kreditech for a while, and we've been, had lots of multi-jurisdiction experiences in countries like South Africa or Australia, for example. We have very tight responsible lending obligations as a consumer credit provider. So one of the things that you need to do is, for example, make sure, they call it the language that they use. You have to make reasonable assessments about whether the person could repay the loan or not. And very interestingly, and this probably will be at least a bit shocking with if we contrast it with the European data protection and privacy tradition, let's put it that way. But one of the things that the regulator used to tell us was, we want you to at least check out whether this person has welfare. So we need you to check, whether there have been any payments from state agencies to finance him. And if he gets those, you don't give a loan. But more importantly, now that we're talking about the payment services, now that we're talking about the Payment Services Directive, I'm going to wrap it up. They also forced us to have banking transactions for up to 90 days for customers. So.
Okay. Thank you very much.
Thank you all for coming and enjoy your lunch.
Yeah.
Apologies if we didn't get for your questions.